Hi, Mark Anderson here, mortgage banker with Paramount Bank. I am licensed to lend in all 50 states, and I would love the opportunity to earn your business. Today was another late day for me. I had a lot going on throughout the day. It was one of those days where the phone would ring. I'm hearing the call waiting coming in. I get off the phone. I check my voice messages. Other calls are coming in, and I just, when times are like that, you just have to kind of slow down. You take one task at a time. I just took a break for dinner with my wife about an hour ago. Took a little bit of a break, but I've got actually a fair amount more to do tonight. But I wanted to make sure to shoot this video because I thought that what happened in the bond market today was interesting. And I thought it was more interesting how that both affected mortgage rates today and how it did not appear to affect mortgage interest rates today. So here's what I'm talking about over here. Today, the bond prices opened, same levels they were at yesterday. We were pinging around between this 103.7, 103.8, up into 103.9, pushing very close to that 104 level. Then we saw a big drop off here. Now the drop off looks dramatic here, but we basically ended up at pricing that was almost identical, or rather bond pricing that was very, very, very close to where the market opened today. This is the interesting part of this. The bond prices dropped from that high of 104. There were several investors that made their pricing worse. These weren't dramatic rate changes, just very, very slight changes to worsen their pricing. They're very quick on that trigger, which feeds into a theme that I've talked about several times in these videos, that it seems that the mortgage investors, the correspondent lenders out there, are very quick to change pricing for the worse, but they're very slow to change pricing for the better. And this was so cool that this happened today because it's just an interesting little case study in a day. We see two extremes here. We see a minor drop in the bond prices versus the highs of that morning. We see a minor drop. There were some negative price changes. And then we see a slow, steady, gradual push up to this 104 bond price. And it kept going higher. And by the end of business today, we ended up at a very high bond prices, 104.14 level. And we saw them change pricing for the worse here. And again, that wasn't like across the board, but it was a few of the big investors. And then over here, when we get to this high level, like not a peep. I had one lender out of my entire set of correspondent lenders that we work with at Paramount Bank. I had one lender change their pricing to get a little bit better, which would be good news, but that lender's pricing wasn't competitive at the beginning of the day either. I think what they were doing was really just trying to catch up with the market. So tomorrow will be interesting. If we're to kind of play the odds out here for a couple different possible scenarios for tomorrow, if the bond prices are sustained at this 104 level tomorrow, maybe even they come in a little bit higher, I would like to think at some point in time, even though these investors are stubborn and they're very reluctant to make these rates lower, I would like to think that at some point they're going to have to. So if this is sustained, maybe we will see slightly better pricing tomorrow. The converse is also a distinct possibility that we will see a big reaction down from here. And I think that if bond prices end up being significantly lower than this tomorrow, I think that you're going to see negative impacts across everybody's rate sheets. Pricing is going to get worse as a reaction to this. But either way, it's going to be interesting. Now, I'm shooting this video very late in the day today. Tomorrow, my goal is to get this out midday because it's going to be very interesting in the morning to see what is going to happen in this crazy kooky market. So I would be happy to take a look at your scenario. Give me a call, shoot me a text anytime. More from me tomorrow. Thank you very much for watching.